if you're paying tithing on stock gains, you might be giving the IRS more than you're giving the church. And I'm not talking about some sketchy tax loophole. I'm talking about a completely legal strategy that the church has built an entire system around. But here's what nobody tells you. Most Latter-day Saints who invest are leaving tens of thousands of dollars on the table because they've never heard of stock donation. In this video, I'm going to show you exactly how to donate appreciated stock directly to the church, why it's one of the most powerful financial tools for members who invest, and the step-by-step process to actually do it. But you need to watch this all the way through because if you mess up just one part of this process, you could accidentally trigger the very tax you're trying to avoid. Let me paint a picture for you. Let's say you bought $10,000 worth of Apple stock 5 years ago. Today, it's worth $25,000. That's a $15,000 gain. Awesome, right? But here's the problem most people don't think about. If you sell that stock to get cash and then donate the cash to the church, Uncle Sam steps in first. You'll owe capital gains tax on that $15,000 profit. For most people, that's 15% federal plus your state tax. In Utah, that's another 4.65%. So you're looking at nearly 20% gone before your tithing dollars ever reach the church. On $15,000 of gains, that's $3,000 to the government. Therefore, instead of the church receiving $15,000 in tithing, they only get $12,000 because you had to sell the stock first. But what if I told you there's a way the church gets the full $15,000 and you pay zero capital gains tax? That's exactly what stock donation does. And before you think this is only for the ultra-wealthy, listen to this. If you have even $5,000 in a brokerage account that's gone up in value, this strategy could save you hundreds or even thousands of dollars. Now, the church has actually made this surprisingly easy to do, but there's one critical mistake I see people make that completely destroys the tax benefit. I'll tell you what that mistake is in just a minute, but first, let me show you why this works. Here's the tax code magic behind this strategy. When you donate appreciated stock directly to a qualified charity, two incredible things happen. Number one, you get a charitable deduction for the full fair market value of the stock on the day you donate it. Not what you paid for it, what it's worth today. Number two, you never have to pay capital gains tax on the profit. The tax liability just disappears. Now, this isn't a Latter-day Saint thing. This is IRS code that applies to all qualified charities. But here's why it's particularly powerful for us. We're already planning to pay tithing. We're already setting aside that 10%. Therefore, we're not trying to figure out if we should be charitable. We've already made that covenant. So the question isn't whether to donate, it's how to donate in the most efficient way possible. Brother Johnson bought Tesla stock in 2019 for $20,000. Today, it's worth $80,000. That's a $60,000 gain. He wants to pay $8,000 in tithing this year. Option 1, the way most people do it. He sells $8,000 worth of Tesla stock. But wait, he needs to account for capital gains tax. That's roughly 20% on the profit portion. So he actually has to sell about $9,500 worth of stock to end up with $8,000 cash after taxes. He pays $1,500 to the IRS, then donates $8,000 to the church. Option 2, stock donation. He donates $8,000 worth of Tesla stock directly to the church. Zero tax. The church receives the full $8,000. Brother Johnson gets an $8,000 charitable deduction. Same tithing paid. But in option 2, he kept $1,500 that would have gone to taxes. And here's the thing that makes this even more powerful. That $1,500 he saved, he could donate that too, or invest it, or use it for his mission fund. But if he'd gone the normal route, that $1,500 would just be gone. Now, this all sounds great, but here's where people mess it up. And I've seen this happen multiple times. They think they're donating stock, but they accidentally trigger the tax anyway because they don't understand the one rule you absolutely cannot break. Let me show you what I mean. The critical rule is this. You must transfer the stock directly. You cannot sell the stock first and then donate the cash. The second you click sell in your brokerage account, the tax event happens. Game over. You now owe capital gains tax. Even if you immediately donate that cash to the church 5 minutes later, the IRS doesn't care. You sold the asset. You owe the tax. This is where I see people stumble. They log into their Fidelity account. see the stock, think, I'll just sell this and donate the cash. And boom, they've just cost themselves thousands of dollars. The correct process is to transfer the shares directly from your brokerage account to the church's brokerage account. The church receives the stock itself, not cash. Then the church sells the stock on their end. But here's the key. The church is a tax-exempt organization. When they sell it, they pay zero tax. That's the magic. Okay, so how do you actually do this? I'm going to walk you through the exact step-by-step process. Step 1. Make sure you have stock that's actually appreciated. This strategy only makes sense if you have gains. If you bought stock at $50 and it's now worth $40, you're better off just selling it and donating cash. Or honestly, maybe holding it until it recovers. But if you bought it at $50 and it's now worth $100, you're in the perfect position. Step 2. Decide how much you want to donate. Calculate the dollar value based on the current market price. If the church needs $10,000 in tithing from you and your stock is trading at $100 per share, you'll be donating 100 shares. Step 3. Contact your brokerage. This is where most people get nervous because it sounds complicated, but it's actually pretty straightforward. You're going to call or message your brokerage, whether that's Fidelity, Vanguard, Schwab, whoever, and say, I need to make a charitable stock transfer. They do this all the time. They have a form for it. Step 4. Get the church's receiving information. The Church of Jesus Christ of Latter-day Saints has a specific brokerage account set up to receive stock donations. You'll need the church's legal name, Corporation of the President of the Church of Jesus Christ of Latter-day Saints, their DTC number. This is like a routing number for stock transfers. Their account number. Now, I'm not going to put these numbers in the video because they can change, and I don't want you using outdated information. Search stock donations in the search bar, and you'll find a page titled Donating Stock. That page has the current transfer instructions for every major brokerage. Step 5. Fill out the transfer form. Your brokerage will ask for what stock you're transferring, how many shares, the receiving account information. This usually takes 10 to 15 minutes to complete. Step 6. Wait for the transfer. Stock transfers typically take 3 to 5 business days. Your brokerage will move the shares electronically to the church's account. Step 7. Follow up with the church. Once the transfer completes, you'll want to call church headquarters or use the online donation system to let them know how you want the donation allocated. Do you want it to go toward tithing, fast offerings, missionary fund? This is important because the church receives stock donations all the time, and they need to know whose tithing account to credit. Now, I know what some of you are thinking. This sounds complicated. Is it really worth the hassle? Let me answer that with a question. Would you bend over to pick up a $1,000 bill off the ground? Because that's essentially what you're doing here. For many families, this strategy saves $1,000 to $5,000 or more every single year. The first time you do it, yes, it takes maybe 30 minutes. But after that, you've done it once. You know the process. It takes 10 minutes. Another question I get, what if I need the cash from selling the stock? Great question. This strategy works best when you're planning to donate anyway. If you need to sell stock to pay for living expenses, then you sell it and pay the tax. That's fine. But if you're like most faithful Latter-day Saints who are setting aside 10% regardless, you can get strategic about where that 10% comes from. Maybe you donate appreciated stock for tithing and you use your cash paycheck for living expenses. One more thing. Do I still get to itemize this as a charitable deduction? Yes, absolutely. In fact, you get to deduct the full fair market value of the stock. So if you donate stock worth $10,000, you get a $10,000 charitable deduction on your tax return, even though you might have only paid $4,000 for that stock years ago. Here's an advanced strategy that some of you high earners need to hear. If you're in a year where you had unusually high income, maybe you got a bonus, sold a business, or had a big commission check, you might be pushed into a higher tax bracket. That same year, your capital gains tax rate might also be higher. This is the perfect time to donate appreciated stock because you're avoiding tax at your highest rate. Some families will actually bunch their donations. Instead of donating $10,000 this year and $10,000 next year, they donate $20,000 of appreciated stock in one year to exceed the standard deduction threshold and maximize their tax benefit. Now, I'm not a tax professional, so you'll want to talk to your CPA about your specific situation. But this is a conversation worth having. There's actually one more way to supercharge this strategy that almost nobody talks about, and it involves retirement accounts. But that's a whole separate video. Look, here's the bottom line. If you're investing and you're paying tithing, you need to know about stock donation. The church has made this easy. The tax code rewards this, and your tithing dollars go further. If you found this helpful, do me a favor. Share this video with someone in your ward who invests. Most Latter-day Saints have no idea this exists. And if you want to go deeper on LDS specific financial strategies, I just made a video on should you pay tithing on gross or net income, where we actually run the numbers over a 40-year period. It's eye-opening. That video is linked right here. Deseret Dollars is helping you balance your budget while building the kingdom. I'll see you in the next one.